In this video, I'll be breaking down exactly how I made about $4,300 in a matter of minutes. The first thing that we'll be talking about is preparation. Preparation is exactly what allowed me to have the confidence in order to execute the trade that I did. Now, how do we prepare as traders? Well, the way that I do it is through my pre-market game planners. So before I approach any trading day, I have to make sure that I have read and analyzed the market before it opened. Now, there's a very specific reason for me doing this, and it's simply because a lot of traders do not understand that pre-market is rational thinking and in-market is irrational thinking. Very often when you are about to take a trade or you think you're about to take a trade, you will get very irrational thoughts. That will often lead to you breaking your system rules or simply just taking stupid trades. And to avoid that, I make sure that I analyze the market before it opens. That way I make sure that I am completely unbiased and I am thinking with a rational mindset. Now, does that mean that I have to follow my pre-market game plan every single time? No, because the market can change and tell me otherwise, but it does give me a great foundation for every single trading day. And in this example, I'm going to show you exactly how my pre-market game planner essentially made this trade super easy for me. So we're looking at the NASDAQ 100, and this is exactly what the market looked like before it opened. Right now, we're looking at a 12-hour time frame, which is less common. A lot of people ask me why I use a 12-hour time frame, and I tell them the time frame doesn't really matter. So the people that think that you can only trade an hourly, a 4-hour, a daily, and all those very generic time frames, that is simply wrong. You have to look at all the time frames. So for example, I could be looking at a daily chart and I wouldn't see any imbalances, but then I take a look at a 12-hour chart and all of a sudden we have a very large inefficiency in the market, and I would have missed this inefficiency if I didn't look at the 12-hour chart. So I find that the 12-hour chart is a really good in-between chart. Now, when I say in between, I mean in between a daily time frame and an intraday time frame. So that is why I include the 12-hour time frame in my top-down analysis. Now, as you can see, we had a large inefficiency right here, also known as a fair value gap, and these fair value gaps are essentially inefficiencies or imbalances in the market. That means that price wants to fill in this imbalance or inefficiency, and so I like using these imbalances or inefficiencies as my drawn liquidity. So a lot of people are led to believe that you have to use highs and lows, aka liquidity, in order to figure out where the market is going next. I teach my students and have taught a lot of people on YouTube that trading towards larger imbalances can actually be a lot better than trading towards highs and lows. In my experience, if the inefficiency is very large, well then there is a very high chance that the market will come back to that inefficiency. So that is exactly what I saw this morning. Now I had a buy side target, which again was this 12-hour imbalance right here. And then I had a sell side target, which was the fill of this new day opening gap. So a new day opening gap is also an inefficiency in the market, which means it is something that price wants to fill. So this right here essentially gives me my trading range for the day, and that made my day a whole lot easier. So right here, we're looking at a 1-minute time frame, as I am an intraday trader. Even though I do top-down analysis and include a lot of different time frames in my pre-market analysis, the majority of my trades are executed on a 1-minute or 5-minute time frame, and this one here was executed on a 1-minute time frame. Now, as you can see, this right here is exactly why this day becomes super easy for me, because I know exactly what I'm looking for. And again, the only reason why I know that is because I analyzed the market before it opened. Now, the reason why this becomes very easy for me is because I'm looking for one of two things. I'm either looking for the market to break down here, fill my sell side target, and then I will look for longs towards my buy side target, or I am looking for the market to shoot higher up into my buy side target and then look for shorts into my sell side target. So I have given myself two scenarios, which means I have a great foundation for the day and I have confidence in executing the trade as long as I wait for one of those levels to get hit. Now, in this case, I'll play it out here, and as you can see, it went for my sell side target and filled in that new day opening gap. Now, just because I have made my pre-market game plan and analyzed the market before it opened, that doesn't necessarily mean that the market is 100% going to do as I thought. So what I look for is displacement, which again is a fancier word for volume. So when my sell side target gets hit, I want to see an immediate reaction from price moving higher. And again, I ideally want a lot of volume behind that, which is what we call displacement. Now, as you can see right here, we are getting a bunch of bullish volume, and I am now very confident that this is where price is going next, right? That 12-hour unmitigated imbalance. So now all there's really left for me to do is to hope that my trading system appears within this leg before we hit the 12-hour imbalance. This would be a perfect time for my continuation model to play out, And so all I'm waiting for is some sort of swing high and a pullback, which we're getting right here. So I'm going to draw my optimal trade entry from this swing low right here, or just the most recent pullback. So my continuation model in simple terms is essentially finding a trend, which in this case is an uptrend, finding a pullback or a consolidation, which is this one, waiting for an expansion move higher away from that original consolidation. I am then waiting for the market to pull back, and I am going to long the market from the optimal trade entry, drawing it from that first consolidation to the most recent swing high. So this right here is again my continuation model in very simple terms. I'm going to enter off of the 0.618. My stop loss is always going to the swing low, and my take profit is going to my target of that 12-hour imbalance. Now, the reason why I use an optimal trade entry is because I am essentially trying to predict the bottom of a pullback in an uptrending market. And one of the easiest ways to do that is with the optimal trade entry. If you have a pullback within a trend, whether it's a downtrend or an uptrend, that pullback is often going to end within the optimal trade entry. Another benefit to using optimal trade entry is that you always follow the premium and discount rules, which means that if I buy an optimal trade entry, well then that means that I'm buying in discount of the most recent range. Something very important to note is that I have logic behind my stop loss, my entry, and my take profit. I see way too many traders that have logic behind their entry and maybe their take profit, but absolutely no logic behind their stop loss. As a trader, we have control of so little, but one of the things that we do have control over is again where we place our entry, where we place our stop, our take profit, where we go break even and take our partials. So when we have control over so little, we better double down on the small things which we do control. So in my opinion, you need just as strong of a reason for your stop as for your entry and your take profit. So my reasoning behind this stop is that we have an imbalance right here, and that imbalance has already been mitigated. Not only that, but I am trying to capitalize off of a pullback in an uptrending market, and if we break the previous consolidation, which would be this low right here, well then that's a strong sign that this is no longer an uptrending market, but it is indeed shifting to a downtrending market. So if we end up running that low, I can confidently say that my analysis is now invalidated. So to break it down into simple terms, your stop loss simply have to invalidate your trade idea. So let's play it out here and see exactly what happened. So as you guys can see, we got an immediate reaction and price immediately went higher. This was a very stress-free trade. A question I often get is, where do you go break even and where do you take your partials? Now, my logic behind break even and partial points is simply do it in a place where the market has a high chance of going against you. So for me, that is often optimal trade entries in the opposite direction, and that's exactly what I did in this scenario. So as soon as price reached the 0.618 of this optimal trade entry, well then I went break even because that is a very large reversal zone. And you can see that because that is exactly what I used for my entry, and that sent price higher. So that also means that there's a good chance that that could send the market lower. And so that is exactly when I went break even on this position. But again, it really just comes down to where is there a high chance that the market could reverse on me or simply just go against me. Now let's play this out and let me show you exactly what ended up happening. And as you can see, my analogy was on point. And again, the only reason why I had so much confidence in executing this trade was because I analyzed the market before it opened. So what are the things that I write down? Well, I like to write down the economic calendar for today. Do I expect a lot of volatility? I like to write down all my key levels, and I really like it when I can draw myself a trading range, meaning a buy side target and a sell side target. And again, the reason for that is simply because it's does not become easier than this, right? We wait for a break of the low and then we start trading towards our buy side target, or we wait for a break of the high and then we start trading towards our sell side target. It just becomes a lot easier. So that was another trade breakdown. I really hope you enjoyed. And as I always say, trade breakdowns are some of the purest and best information that you can find on YouTube. If you enjoyed the video, make sure to like and subscribe to my channel. And without further ado, I'll see you in my next video.